Hello, everybody. This is Gabriel Shaheen, Certified Financial Planner and Principal of Falcon Wealth Planning, reaching out to you and giving you an update on the volatility that we're seeing and just things to be aware of how your portfolio is and how it's managed and just really what's going on in the market. And what we're currently seeing is volatility really from the same story that we've heard earlier this year with increased inflation, rising interest rates, and really big tech is really getting a correction right now as we're seeing the NASDAQ is down over 20%. So we're seeing a repricing that's happening. Luckily, a lot of you are value tilted and you are globally diversified. So that is helping out quite a bit. And additional news with the EU and the oil embargo happening now with Russia. So these are all just major global effects that are affecting the portfolio. I did want to highlight a few things just on we call it the Falcon flyby. And this is just understanding that when you look at the market, that there are some things to consider. And that is when you take a look at your bonds, even though we could argue that we've been in the top three worst times of performance with bonds, keep in mind the past 2 years, stock market has done well in 2020 and 2021. But if you look at how it's historically performed in the next 2 years, bond prices have gone well. And you've already seen that in short-term yields and what they're currently doing right now. And you're seeing short-term yields are actually starting to yield fairly well. And you take a look at that also, taking into fact of how the stock market performs in very poor periods. You look at some of the top 25 worst days, you look at the 1 year later returns have been quite pleasant. And really, you're seeing this fairly consistent when you look at satisfactory levels and the contrarian approach that we have at Falcon. And sometimes that ends up being the best situation because when those are not satisfied, that's when you really start getting really good returns on average. And right now, you can see the satisfactory level is going below the standard 34% where this is on. So we are continually taking advantage of these markets right now. We're buying when those are fearful. And I like highlighting that when you look at the stock market return over a very long period of time, you could see that in being invested 100% in the stock market has yielded a $14 million, $1,000, right? We wish we would have invested 100 years ago. But when you look at investing about 90% in equities, you actually have more money. And I use this example, if the stock market goes up 50% and down 50%, well, you're at now only a 25% down of the market. So this, of course, is an issue. If you have 100,000 and you lose 50%, you have 50,000. If it goes up, you now have 75. So it's sometimes the best way to make money is just not to lose it. Lastly, you're looking at inverted yield curves. And really, this is a lot of news. Listen, recessions happen. It's a very normal effect. It's 2 quarters of negative GDP. And so it's a very normal effect for it to happen. So yes, it goes inverted. Naturally, recession happens, but to imply it's going to happen in the next year or 2 or 3 or whatever is maybe not appropriate. And when you look at the returns that happens during the inverted yield curve, you can still see they are very fruitful returns. And you can see it actually does do well on the bond side. It does do well. So, and of course, short terms do better in an inverted yield curve because now the short term is getting higher rates, which is outperforming mid and long. And so just in short, guys, we are the contrarian effect. We do take profits off the table for that reason. So you could expect us to continue to do that. And we are fully aware of what's going on. And we already made changes in portfolios a week ago. So you should have seen some trade confirmations that came through. Not that we expected this to happen, but you have to be prepared of taking advantage of what's going to happen. So hopefully this was helpful.